What if I told you that I've deducted expenses related to most of these medals that hang on my wall? Yes, they are medals for races I've done. No, I'm not a professional athlete, but every year I take deductions on my tax returns related to these medals. And yes, I know that this is a recorded video publicly available that someone could easily send to the IRS. So let's dive into what it takes to legitimately deduct expenses related to race medals when you're not a professional athlete. For context, the reason I'm having this conversation is because I constantly get questions from financial advisors and taxpayers both around the idea of, hey, what else can I deduct? And most people get really aggressive with this idea because they want to pay as little in taxes as possible. And I'm right there with you. I only want to pay what I absolutely have to, but it's not worth it to play stupid games with the IRS. You will win stupid prizes. And by stupid prizes, I mean audits and penalties and interest, those types of things that we'd rather avoid. So if we want to look at things that we can deduct on our tax return, we got to start with what was the legitimate purpose behind them. If we don't have a business, that's a whole separate discussion. We'll come back to that in just a second. As individuals, one of our only opportunities for deductions in the traditional sense is on Schedule A. And the biggest categories of deductions that people actually get to use on Schedule A are mortgage interest, property and state and local taxes, and charitable giving. Now, even if we do a lot of all three of these, a lot is a relative term. The standard deduction on a tax return anymore is very, very high. Going into 2025, it's roughly $15,000 for an individual and $30,000 for a couple that's married filing jointly. That means between those different categories, you need to have deductions that total more than $30,000 as a couple if you want to get any kind of tax deduction. And so it's not just is the specific item tax deductible, we also have to look at is there enough of it to get us over the standard deduction. And the last stats I saw were that 90% of taxpayers are taking the standard deduction, which means for most of us, even if we have expenses or cash outflows in one of those categories, it's not going to get us over the standard deduction. So really we need to spend less time worrying about, can I deduct my race medal? Can I deduct this gimmick I saw online on a YouTube video, go figure. And we just need to worry about doing the simple things consistently over time. A lot of us would be better off doing those easy things like, did I contribute to an HSA? Did I contribute to a 401k? Did I make sure I avoided underpayment penalties? Okay, so let's get back to how I deduct these race medals. I am a business owner that does expand our opportunity for deductions to a certain extent. If I'm a W-2 employee and I travel for work, a lot of times my company is going to pay for that. It's not income, so it's not a deduction. But if I have to pay out of pocket as a W-2 employee, I don't get to deduct employment expenses. As a business owner, if there is a valid business purpose for what I'm doing, which the IRS describes as ordinary and necessary to carrying out my business, then I can potentially deduct that. Now, I'm a CPA, I do tax planning, I work with financial advisors, I work with taxpayers. So there are plenty of things that are ordinary and necessary for my business. Running races is not one of them. Even though I'm doing an event later this year that actually is officially sponsored by Spartan, a little check on my bucket list, that is not an ordinary and necessary part of being a CPA. So when I say that I deduct expenses related to these races, I'm looking at the bigger picture, because what I do is anytime I travel for work, when I'm going to speak at conferences, when I'm doing owners meetings, when I have valid business purposes for those trips, I immediately look at races I can run in the area. So it's not that I'm deducting the cost of the race itself. I'm not deducting any additional expenses to get to the race. But if I fly to Phoenix from Spokane and I'm there for a conference, now I've deducted my airfare, I've deducted my hotel for during the conference, I've deducted ground transportation. I can add all those things as legitimate business expenses. If then I stay an extra day and run a race while I'm there, I don't have to go back and assign a portion of my airfare to the race as opposed to my business travel. And so now travel that I was doing anyways, or that I would have had to separately incur the cost of if I hadn't done it connected to a business trip, I essentially am able to deduct on my tax return. So yes, the video is a little bit of a bait and switch because I want to drive home this point that it doesn't pay to get gimmicky with the IRS. We want to pay every dollar we owe and look for those ways that we can make sure we don't leave the IRS a tip. So one of the ways I do that is when I'm traveling for business anyways, I look at what else can I be doing there so that that portions of my travel are already written off as tax deductions. So if you are a business owner and you are looking at travel throughout the year, I'd strongly encourage you to do the same thing. This is absolutely something you can work with your clients on. Again, we want to make sure we're taking valid business trips. Let's not do things purely for tax purposes. Make good life decisions, then figure out the most tax efficient way to go about them. Happy tax planning.